traders, it's January the 9th and we're going to do Dissect and Detect. First things first, let's have a look at what actually happened yesterday. Yesterday, I'm just going to bring up the news announcement just in case some of you didn't actually follow what was going on with non-farm payroll, but let's just take a quick sneak peek at the numbers that came in. So here we are, non-farm payrolls. This is what came in previously, and the consensus was 200,000. So when a number of 292,000 comes in, this is extremely, extremely bullish for the US dollar market. Now, when it was broken down and people looked into the actual numbers, just to see what the employment figures were actually made up of, there was probably maybe about 50,000 of that broken up into part-time employment and other outside of the professional sector, but that was still a 40,000 increase on what was actually expected. So if we get rid of the 50,000 temporary employment and part-time, etc., non-professionals, there was still a 40,000 increase on what was expected. So the numbers were very, very, very bullish for the non-farm payroll. Now, going on from what we've talked about the previous couple of months, things that we've been looking at, which is purely dollar strength, selling the commodity-backed currencies, the news on China, escalating the commodity-backed currencies, which in essence has meant that I've amended targets now on Aussie shorts, Kiwi shorts. We're looking to take more out of that market, and we'll be looking to add back in. So consensus is we're still buying dollars. There was unusual market movement, so I am actually going to focus on one of those right now, and this is euro dollar. When we think about what was actually taking place yesterday and the numbers that were coming out, you would anticipate that we should see a large dollar push through or follow through. And if we look at Friday's candle, the way it finished off was with dollar weakness, or I should say, not necessarily dollar weakness, but very much a bullish stance in buying euros. So there's definitely some kind of, I don't know, let's say there's some kind of institutional buying that might have larger orders sat up here looking to get short this market, because when we look at what's going on, we've got monetary policy divergences, but then we get a huge number like that, which is very, very bullish for the US market. So there's no way that I would be anticipating the market to finish like this on the Friday. I would have expected a real push through after the numbers came out, because it did drop about 100 points, but then came back so much stronger and rallied about 130 points. So this was unusual from what I was expecting. So euro dollar, we've probably got to sit on the sidelines. I'm just going to zoom out a little bit and see what might be actually going to take place. So you can highlight this trend line that was in here and this longer term one here, where we saw it test once, twice, 3 times, break out, come back, retest. Okay, this is where I was anticipating we'd probably see the euro continue to slide. You could argue we've got a shorter term trend line here, which I'm sure some people might be looking at a little bit of a channel. So if we break that down onto a smaller time frame, we'll probably see some sort of channel forming through here on the euro dollar, through those highs, something through these lows here. But I think what we're going to look at is maybe a test of this area again here, whether it's going to come back up to my red zone, this one here, which, when I say red zone, it's what I use for support and resistance, because the markets are, the best way of describing the markets are that they're very random. So it's unusual you get support and resistance levels that actually match to the pip. So I always like to use little boxes, identifying where I want to potentially get in short and get in long, or where I envisage that the market is going to encounter some sort of reaction. So if we look across here, we can see test here, a couple of tests in here. Market breaks through and then rejects again here 3 times, breaks, comes back and tests again. So we might find that 1.1125 area, this one here, a key area. Also, we might look at this and it could rally back up into here, test this trend line, and where it intersects with that horizontal. So this could be potentially what's going to happen. We might see that. On the flip side, this is something I'm going to say, well, hold on, we might see some short-term bullish stance to the euro, which doesn't really make any sense to me. So in essence, I'm going to stick to what is weak and what is strong. Okay, so let's move across to dollar CAD daily. Okay, well, you can see I've got resting orders sat in here at 104s. To be fair, I think we can pretty much kill this order once the market opens. I can't imagine that we're going to see any sort of pullback to here just yet. The numbers were so good on the dollar that I think we're going to continue to see Canadian weakness, which is really getting pushed and under the grill now with oil prices. Okay, well, we all know that oil is Canada's biggest export. Okay, so wherever oil is getting crucified, what you'll find is the Canadian dollar will be weakening at the same point. So what we've got a beautiful match here in the sense that we've got dollar, US dollar that is, getting strong and stronger, issuing fantastic data yet again, which if we get more data like what we've just seen going through January and February, I would expect another rate hike from the US in March, which is just fantastic for us trading. Why? We're going to get trend. And all we want to do is looking at any sort of pullbacks. So here we go, guys. Dollar CAD. Let's trade and see what we can. I mean, 1.4 is a lovely level. If we go out, we can see that going back here, beautiful test, rejection. Now this is on the monthly time frame. So any pullback into there would be very nice, but it's got 170 points to pull back. Will that happen? Won't it? I don't know, but I will be watching. Now let's go back to where we were. So this is the daily. Now this market is an aggressive move up. We've got 1, 2, 3, 4, 5 consecutive up range candles, which means that the high has broken the previous candle's high, and the low is higher than the previous candle's low. So this is very, very bullish. All we're looking for is continued movement. We've got a break and a close above the high here. So any sort of pullbacks, this is the hour time frame now, guys. So what we'll be looking for are any sort of retracements. Yeah. Intraday, we'll be looking at getting into dollar CAD long, and we'll be looking at taking it and running the position. What I will say is, if you are intraday trading, always make sure that you're exiting a minimum of half of your position. Just banking profits, because your intraday trading is, you always want to keep that in the black. You want to keep banking money, keep it turning over, and let your end of day or your longer term positions, which you'll be trading from the daily charts, weekly charts, let those ones run, and let those ones act as sort of your investment, your investor style mentality. Okay, intraday, you want to keep banking. So we can see this market, we don't want to be a social proof trader. What do I mean by social proof trader? We don't want to be just buying because the market is in a rally. Okay, this is where 95% of people go wrong. So what we have to think about is, we don't want to be that 95 or that 90% of traders that lose money. We want to be in the 5 or 10% that are making money. Now with our guidance, you will definitely become one of the 5 or 10%. So what I'm looking for is any sort of pullback. Okay, so it could be a pullback into these lows. It could be a pullback if you're going to use moving averages. It could be looking at this sort of shorter term trend line, or just trading price action. I mean, we can bring in moving averages if you like. I'm not a big fan of moving averages, but at the end of the day, they work very well in a trend. So we could put 20, 50, whatever, as long as we remember a key point. Whenever we're trading, guys, things that we need to remember is we always buy from support and sell from resistance. Okay, so buy from support, sell from resistance. Any pullback, we'll probably see that the 50, this is 1 hour time frame. If we do get a pullback towards this trend line, you'll probably find that the 50 is going to be somewhere along it as well, because as price retraces, the moving average will start to fall as well. So somewhere along those lines will be a nice area to be getting long, or just using market cyclicity and price action to guide where we're likely to get long. Now, so that's dollar CAD. Let's have a look at GBP USD. Now, GBP USD has been, or I should say GBP on the whole, has been getting annihilated. Okay, it's selling off very, very aggressively. I'm just going to zoom out to a higher time frame, the monthly. Now, if we look here, we've got very, very key area of going back here, which is early 2010. Then we've got 2015 lows, and then where we're currently at now, which is 2016. Just get rid of this. Oh, sorry, bring that back in. So I was expecting to see some kind of reaction here from sterling, a bit of buying power from sterling, which we've not seen yet. So I think what we have to wait for is see what happens next week. If we do get continued follow through, I mean, let's look at, we can't really count this as a monthly candle yet because we're only 9 days in, we've had 1 week of trading. But let's see what's happened. This is very, very strong selling power, or pressure I should say, on GBP USD. It doesn't look like there's any sort of easing off in this yet. I think if we get a close below this level here, close below sort of 145, I think we're going to be heading down to the 140s, 142s, okay, which is 2010 lows. So this is going to be a sort of key area where we are now. I would anticipate that we should be looking for some sort of correction here, but the numbers, like I said, again, it's all going to keep coming back to the numbers coming out of the US. Okay, we've got monetary policy divergence, i.e. the US increasing interest rates, the rest of the world looking at decreasing. And then we keep getting good data out of the US, or as expected data, which is just adding more power to the fact that Ms. Yellen is more than likely to add to another rate hike coming in March. So what do we do with GBP? Well, the answer is trade the trend. Okay, trade the trend, intraday trade it. There's no end of day setups. This market is in free fall. The only time we know when to stop trading is the second we have a loser. Okay, so then we'll probably start saying, right, if we have a loser, it might be the end of the trend, and we'll wait for some kind of correction. Okay, so GBP USD, keep looking to trade the trend, but I'll probably be a little bit hesitant and see how Monday opens and starts to move with this area that I've highlighted. Now, the markets that I'm really, really focusing on primarily are dollar CAD, because we've got the weakening oil, we've got Aussie dollar. Now, let's look at Aussie dollar. This has been moving beautifully for me and for our traders. I'm just going to get off these moving averages because they're not required. Okay, so let's come back to the daily and see why we looked at trading this particular chart initially. All our traders have taken this trade, even though it was through the holiday period. I know there was a couple that haven't. Now, initially, why did we take this trade? Well, we can see support breaks through, becomes resistance, and then if we look at the price action leading up to resistance, I'm just going to zoom in so you can actually see what's happening clearly. So look at the price action leading up to this. We get a lot of bullish momentum, okay? Then here we can see sellers came in for whatever reason. Another big bullish bar. Then indecision. Then we have a fake out. What do I mean by a fake out? Well, basically buyers trick us into thinking that the market is going to break above like it did this time here. And then what we see is we see a correction and the market falls down. Now you can see the green line here, this was our entry. So why did I sell at this point here? Well, the reason behind it was I'm bearish the commodity markets or commodity-backed currencies. So on Sunday night, as soon as the markets opened, I sold straight on the open of the market. Initial stops above the highs, just in case there was going to be a retest, and maybe test where it was before continuing to the downside. If it had carried on to the upside, well, I'm always risk protected. Okay, I will never lose more than I'm prepared to lose. So you have to think about what are you prepared to lose. You should never be angry about losing a trade. So if we look at this, we've gone in here, we've got stops roughly about 50 points. We've already had some money off the table at 75 points. Okay, so it's equivalent of 1.5 to 1 if we'd have risked 1% on that, but that was half our position coming off. Then, as we can see now, it's currently 330 points up off a 50-point stop. So that's a 6 to 1 on the second position. Okay, so for every 1% on the second position, it's up 6%. Now, I did have two further entries through this day here. Okay, this is where I was a little bit restless, you could say. 3 o'clock in the morning, 2 o'clock in the morning, and some news came out of China. I happened to be awake. I was staring at my charts. Basically, China's circuit breakers kicked in. The markets crashed, which basically saying that China, their stock markets fell by over 5%. They actually fell 7%. And in December, they implemented a new system called circuit breaker. And the idea of this circuit breaker is that if a market crashes, or if the market crashes by 5% in any given day, what happens is these circuit breakers kick in and close off the Chinese stock market. Now, that means that no one can buy or sell any stocks throughout China. This is to prevent a crash. However, whether it prevents a crash or adds more panic, time will tell. So this happened, and the knock-on effect of a Chinese stock market crashing, well, their nearest neighbors, Australia supply China with rare earth minerals, iron ore, copper, etc., etc. Okay, so what's going to happen is it's going to have an implication on the Aussie dollar. Why? Well, China's going through difficulty. The second largest economy in the world, okay, is in recession or contraction at least. Okay, how do we know this? Well, the numbers on manufacturing have come in for the last 10 months under 50. This tells us that the economy is in contraction, not expansion. So 10 months in a row, I'd call that recession personally, but we can argue that one. The bottom line is this adds major pressure onto the Aussie dollar. Also the Kiwi. So where this red box is here, this is where my initial targets were. But through this night, when all the mayhem kicked off, I amended my targets and I moved them down here. On Thursday, this day here, the circuit breakers kicked in again. The Chinese stock market was open all of 29 minutes before having to close down again because it fell 7%. So what we're saying is I amended targets again. Now, if we go out, you can see where my targets are now, down here, 2008 lows at the minute. I will amend again, no doubt. I have banked some positions. So in here, I sold twice. But if we look at the monthly and see what happens, look, we've got a really nice sell-off, then a very shallow pullback. Very shallow pullback and a huge monthly candle. Now this is only 9 days. It's 1 week of trading. But that is a big sell-off. So it's a little bit like what we're seeing here. So I envisage that 63 is a realistic target for Aussie dollar considering what's going on in China right now. So Aussie dollar this is a market to focus on. Okay, if we're going to get more unsettling news out of China, focus your attention on selling Aussie dollar. So we've got our, let's call it, we've got our longer term style of trade in here. There's been no pullback whatsoever. It's just done 1, 2, 3, 4 big daily candles straight out. There's been no pullback whatsoever. So in terms of an end of day or investing position, we're going to struggle a little bit unless we get a nice pullback somewhere into this region here, which I can't see it happening, but if it does, fantastic. So this leaves us one other option. This is to intraday trade this market. So whether we go down to the 1 hour time frame or whether we go to any sort of smaller time frames is your preference. So things we can look at are previous cycle lows, look for the market to come back up, retest. Any sort of retracement like this, look for a break below and a close below. Whether we use the 1 hour candle or whether we use a 15-minute is personal preference. So we're always going to look for support and resistance areas, looking to get short. So we can see here, nice support, support, support. Finally breaks through properly, comes back up to retest. There's a nice sell position. We can take some money off the table. We can try and keep some money on the table if you want. But look, fails, double bottoms, comes back up. Now look at this price action. It's very, very clear. Huge bullish move up, then indecision, 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 indecision. This is telling us price doesn't want to go above here. Okay, so we could look at taking some shorts through here, stops above here, talking a 40-point stop. It's already 2-to-1 up. At 1-to-1, I'd take half your money off the table. And if this is going to be the market that's going to drop, well, leave a little position on. So take at least half off, but definitely look at getting a minimum of half off, maximum of sort of 75% off, leaving 0.25 to run. Okay, well, dollar Swiss, this is the inverse of euro dollar. We could potentially see some reaction in and around this area here, but 98.22, which will correlate with the 1.125 on euro dollar, is where we could potentially see some action. Okay, so not really focusing on dollar Swiss too much. The yen is a significant pair at the moment. Well, I've talked about this. I've put some posts on Instagram. So the yen is a safe haven. When we've got uncertainty in the markets, it's where risk off. When I say risk off, it's where investors go to protect their capital. So if you've got investors sat in equities, looking for long-term holds, getting their dividends, okay, what you'll find is as soon as there's unrest in the markets and equities look uncertain, i.e. with what's going on in China, you'll probably find that money departs from the S&P, the Dow Jones, all these global indexes, and they run to safe havens. So your safe havens are Japanese yen, US dollar, gold. Okay, so we'll probably see some bullish moves on gold. Although gold, I wanted it to go a little bit further. I wanted it to test the $1,000 per ounce mark. Now, what we can see is Japanese yen. There's a couple of, or dollar yen. There's some really key levels, and these levels will correlate with what we see on the S&P and the Dow. So things that I'll be looking for is potentially another pullback up to sort of 118.70 for shorts, dollar yen down to the 116 barrier. But are we as well trading dollar yen? You can trade it, and you can make money out of it. But let's be realistic. We're trading at the minute two markets that are very strong. So the idea would be, let's look at pairing yen up with Canadian dollar, pairing yen up with Aussie dollar. Why? Aussie dollar's weak, Canadian dollar's weak, Kiwi is weak. Okay, So our markets to be traded will be Aussie dollar, Kiwi dollar, dollar CAD. Then we've got the other side of the markets which we can trade, which will be Aussie yen, Kiwi yen, CAD yen. Okay, are you noticing we're focusing on dollar strength and yen strength? We're focusing on yen strength because right now, time of uncertainty. And this move here is in correlation with the move on the S&P and the Dow Jones. As they fall, you'll find that yen will strengthen. And remember, this is dollar yen. So dollar is the base, yen is the term. Okay, so what we'll be looking at is, you could potentially trade this, but I'm going to show you, let's have a look at Aussie yen on the daily. Okay, so here's Aussie yen, and we can see we've got a nice test. Look at this huge move down to the pip, big rally off, and again tests and bounces and goes. So if we get a close below this, which we now have, any sort of retracement into this zone here, I think will pay us handsomely. If we break out to higher time frame, weekly chart, we've got to say, well, where are we looking at potentially going? Next sort of stop is going to be this area here. We can see that there's, I've probably zoomed out a little bit too much, but through here, let's just zoom in so you can see. We can see all these tests of wick. Test, 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 test. Very, all within, I don't know, best part of a couple of hundred pips here because we're on the weekly chart. Okay, but this seems a significant area to be looking at targets if this market is going to continue what it's doing. Now, that is a weekly candle. For a weekly candle to have dropped 621 points shows you what's happening. That's what happens when you buy strength and sell weakness. Could we get a continued follow through of that? Absolutely. Look here, in what is it? A few weeks, that market moved 1,200 points. So 1, 2, 3, 4 weeks, 1,200 points. Well, what forgot to go down? Another 670 points to the next zone. So, yeah, I think there's definitely a lot of room to be adding here. Is it a hard one to trade? I don't think so. I think you just have to watch price action and see what's happening. Trade the market cyclical. Trade the pullbacks. Okay, you'll see that there's been some nice pullbacks here. Previous lows. Market breaks through the low, comes back up to test, and it goes again. Here again, we can see it. I like to keep my trading quite simple, guys. It's not about trying to come up with new things all the time. It does what it does. Yeah. Now, you will get the odd loser. I had two on Thursday. Traded Aussie yen short and Aussie dollar short. I had two intraday losers. That was during this retracement here. But look, boom. We can get back in on it just using market cyclicity, break of support, pull back to resistance. Okay? This is all we're looking at here. So this bigger box down here, I'm just going to put in another. I'm going to change the color of this one. Let's change it to green. Hopefully you can see that. Okay. In fact, so what we can see is this one here, the big one that goes all the way across, that we took that support zone off the daily chart. Okay. Now what we've done here is this green support zone that we're going to now use as resistance, like I've highlighted on these boxes here. We can see the market test, test, test for the third time. Now we've got the follow through. So what we're going to look for is price to come back up, hit our resistance, give us a signal, and we're going to trade it short. Does that make sense? Yeah? If you're following, if you've got any questions about this, guys, please feel free to email in at info@phoenixblue.co.uk, or drop me a Skype for all the Protégé clients. Yeah, what you'll see is some great interaction. Let's have a look at Kiwi dollar. I'm going to drop this onto weekly chart. Okay, why have I chosen this weekly chart? Let me just, I'm going to clean this chart up a little bit. In fact, that can, oops, sorry, I'm having a moment of madness. So, Kiwi dollar. I mean, we can see where it's come from in the last year and a half. It's come from up here, 88s, right the way down to where we got in at 68.60 with our initial position. Okay, look at this. Even if you just sold the weekly candle, okay, the weekly candle, which was a 63 pip weekly candle. Yes, it's a very small candle, but that was because it was through Christmas. But look, 63 pips. We're currently up 270, so over 4% just in open P&L if you'd have traded the weekly candle. Now you can see where my entry is. I didn't trade the weekly candle. Yeah, I was aggressive. Now I'll show you why I was aggressive. Look at this closing price here, a test here, closing price, tip of a wick, again. So I was looking at this. Not only have we got that, when we bring in our fibs, we can see that our 50% fib comes straight in at the same point. So I had a sell limit. I had a 35 or 40 point. It was a 35 point stop. Okay. So we can see we got onto this with a 35 point stop. Currently 321 up. So not quite. It's just short of 9% up on one of my positions. The first position I brought out. I got profit of 110 pips, which was 67.50, which is currently pretty much where my stop is right now. I will be looking to get back into this. Okay, you can see where my targets are right now at the year lows of 2015. Okay, will I be looking to get in on any retracement? Absolutely. Shorter time frames during the UK Open and US Open, I'll be looking at scaling in and adding some intraday profits to this. Okay, so guys, if you're trading from home, make sure you are focusing on these markets, whether it's Kiwi dollar or Kiwi yen, some really, really good opportunities for you. Yeah, all you're going to need to do is stay focused. If you've taken 1 or 2% out of the market for the day, maybe just walk away for the day. Yeah, the idea is you make money. If you've made money and you're happy with that amount of money, don't try and force any more trades. But what we'll do is come down again, whether it's the hour chart, 15-minute chart. Again, it's personal preference. But look, support becomes resistance. Support becomes resistance. Support becomes resistance. Okay, so these are all trades that you could have all taken. So where are we going to look now for our next potential if we're using the 1 hour chart? Well, let's have a look. Initially, I'd be saying this is a key area here. Okay, I'll just move this a little bit there. So, you know, I've already said it once. It's not that the market is, it's not precise. It's random. So you are going to get these little pop throughs. Now, ideally, this would be my preferred sort of zone of going short. But for whatever reason, the market did come down to here. Okay? It did come down and test this. So if we do get a pullback here and price action in this zone, I'll be watching it. So you can maybe look and see 1 hour chart come back up to around the 66 even handle number. Then drop down to 15-minute time frame, see if there's a change of cyclicity, see if there's a rejection. Drop down to the 5-minute, see if there's a change of cyclicity, whatever. Use your skills that you've been taught. you understand market cyclicity, or if you're just going to trade the price action off that hour time frame. Remember, guys, we are going to have losers, and we can't take it personally. Okay? If we're done for the day and you've had a couple of losers, you're not feeling good, don't worry about it. Close the screens, read a book, relax. Don't worry about what other people are doing. Just focus on your process. If you focus on the process, the prize will follow. Okay? So we've got Kiwi looking good. In fact, it looks fantastic, Kiwi. This is just a, sorry, I just clicked the wrong time frame there, but weekly chart looks absolutely beautiful. Okay? What we will be focusing on is this neckline here. Okay? I want to see that we get a close below here. If we get a close below here, then these targets will be more than achievable. We'll probably find that if we break through those, next stop is somewhere down here. Okay, so there's some very, very big profits to be, or potential profits to be had on the table. Okay. Okay, so this is one that we really do need to watch. Have I got Kiwi Yen open down here? No, so what I'm going to do is just drag Kiwi Yen across. Okay, so just bear with me 1 second. Alright, look at this. Lovely zone. Did I take it? No, I didn't. Okay, so not a problem with that. Huge engulfing candle here, like yesterday on the Friday. So if I'm just going to zone out areas of interest, yeah, so if we could get a pullback to there, which I very much doubt, you never know. So the next thing will be, let's have a look at it on the smaller time frames. So very, very similar to Kiwi dollar. Can you see? We've got initial sort of area of interest, and then we had that little spike through here, which on Friday, look what it did. It did come back, test, gave us your shooting star, and then followed through. So opportunities will definitely present itself, and hopefully you see now you don't, yes, you can use moving averages, and I know I've not got them, but you can just look at a chart in a very simplistic manner, buy strength, sell weakness, use previous cycle lows, use structure, look left, where's structure, look for your price action, wait for a rotation, boom, take your trade. Okay. I know I'm focusing on the charts here, but I will come across and show you the Commitment of Traders report and how I'm going to analyze that shortly. So that's Kiwi Yen we've looked at, Aussie Yen we've looked at. Final chart I want us to look at will be CAD Yen. Okay, so I'm going to go up to, let me just remove this because it's from our previous. So here we are on daily chart. Look, CAD Yen's just in free fall. Okay, I mean, weekly chart, look at those for two big candles. Well, in terms of a market, it is in free fall. Just look to trade the shorter time frames because really there isn't any sort of pullbacks happening here. Next major zone or trend line, you'll probably see coming into here. This will be where our next sort of interaction will be, which is a good, another best part of 200 points away. Okay, so 200 points on a small time frame is a good distance away. So this is the 1 hour time frame. Just zoom in again, and all we're going to do is look for break close below and then pull back retest. Okay, so let's just highlight this potential area here. Okay, we've got our close below. Probably like to see a little bit more of a follow through to the downside, then come back, retest, and we'll start looking to get short this market. Okay guys, so I'm hoping that what we're looking at here is making really, really good sense. It's you're understanding it. If you're not, guys, just replay the video a few times, because what you will notice is it will start to make sense. You have to practice. If you don't practice, you're not going to improve, okay? It might make sense while I'm explaining it to you, but guess what? In order for you to succeed, you actually have to implement what I'm saying, okay? So that means go away, try and recreate the charts, put into practice what I've just done, and then watch it back. Film yourself. Okay, you'll be amazed at the progress you make in understanding the charts if you actually try and teach yourself, teach a partner. If you don't want to teach anyone, just, like I say, film yourself, watch it back. If you're like me, you'll probably hate the sound of your own voice. I hate watching my videos back, but I do. Okay, so remember, just take these simple things on board. I'll be back with you in a minute, guys, because what I'm going to do is I'm just going to bring Markets Made Clear through, our institutional software for looking at commitment of traders. Okay, so back in a minute. Okay, guys, here we are. We're looking at our commitment of traders report. So let's have a look. So this is how the data comes through. We've got our three categories. We've got our commercials, non-commercials, non-reportables. If we think about, just to give you a background on what each category is. Okay, so commercials, these are your users and producers of a particular commodity or cash. What they do is they use the market to facilitate business, primarily hedge. They're not trend followers. They're not looking at speculating. They don't look to make money out of the financial markets. What they do is they look to protect capital and hedge their positions in order to forecast P&L for their organizations, etc. The non-commercials, these are your investment banks, investment arms, private funds. They use the markets to produce a return for their clients. Okay, and these are the main two that we will focus on. So your non-commercials are trend followers, and your commercials are hedgers, just organizations that use the market to facilitate business, not to speculate. Okay, non-reportables, these are just traders that are large traders that are generally wrong, and I don't even look at these. They're usually trying to do something complete opposite to what we want to do. Open interest are the contracts that yet have not been exercised or closed. Okay, so these are still open in the market. So this is basically the size of the market. The ones we're going to look at are everything on this list, all commodities and all the G8 markets. The only one that I'm not interested in is the Mexican peso. Okay, so if you were to click in each tab, it brings down the last 10 weeks of data. It shows you how many long contracts the commercials have, how many short contracts they have, and their net position is their number of long contracts minus their number of short contracts equals a net position of 26,000. And here this shows a reduction by 2,000 contracts. Okay, the non-commercials, what you'll see is they've got 46,000 contracts long, they've got 59,000 contracts short, and this is a reduction from the previous week of 13,761 in their net on their net position. So what this is saying is their net position is currently they're more to the short side. Okay, they've got 13,761 to the short side, and that's an increase of 3,784 contracts. Okay, now these numbers, don't worry, you don't need to know too much about them because it's all put into information for you here. It's put into indexes. Okay, how do we use the index? Well, if I'm looking at currencies, I'll use an 18-month look back, which is the index 18, or a 36-month look back. And if it's a commodity, I'm going to look at a 6-month. Now, there will be times that I use a 6-month for currency, but that is just to go back into trend. Okay. Now we can filter this very quickly just by a click of the index at the top, and it will bring up the 10 to 0. If we can see these are highlighted, anything from 0 to 10% will be highlighted. This is basically saying that we want to look at selling this particular market. Okay. Potentially. The commercials, when we look at the commercials, it is for reversal trades. When we look at the non-commercials, that is for trend continuation. So anything that's highlighted here, this is telling me that we could potentially look for sell signals. If we click again, it brings up 90 and above, and this is telling me we want to potentially look for buy signals. Okay? And it does the same across on the 18, so sell signals, click again, buy signals, and then the 6 month, we click, these are our sell signals, so natural gas, gasoline, Japanese yen, orange juice, Aussie dollar. See, this was nice. The 6 month was telling us we wanted to potentially sell the Aussie dollar. Okay, now Aussie dollar getting a sell signal from the commercials is something that I'd be saying, right, this is where we've probably seen a rally, and because the commercials will do exactly the opposite. Okay, so let's just bring in this, and I did say that I'll only look at currency with a 6 month index if it's to go back with trend. Okay, so I'm going to change this to the 6 month index. Okay, we're going to look at Aussie dollar. We're going to bring in COP positions, and I'm going to look at the commercials positions and add to chart. Now, if we look, last few weeks, the commercials price has been rallying. This is based off futures. Okay, price has been rallying in here, and what we're looking for is potentially to get short, but it depends what this information is telling us. The information we have down here is the green line, this is our long contracts, the red line, short contracts, and the blue line is our net position. So on a 6 month look back, the commercials are saying that they're extreme short. So what have they been doing with their short contracts? Well, here, nothing of interest for me, and here, nothing of interest. What I'd like to see, if I wanted to get short, based off any sort of commitment a trader's signal is, I'd want to see that the commercials were selling this market. So here, the short signal, what we can see is flatlined. Okay, but let's have a look at the other side of the market, the non-commercials, the trend followers. Okay, so again, what we can see here is a reduction in the market. We can see the short contracts have been reduced, the long contracts have stayed flat, and the net position has increased. Now, this information is collected on a Tuesday and released on a Friday. What I envisage that we will see next week is, because last week was our first week of trading, this reduction here in contracts through the commercials and non-commercials are where we look at the lower liquidity through Christmas period. Okay, does that make sense? So through the Christmas period, you get the institutions, you get everyone reducing their exposure to market changes. So lower liquidity, lower volumes. So now what I'd expect is, we've had our first week. The information will have been collected on Tuesday, so I'd expect an increase of contracts. But let's look what's happened. The market on Friday has absolutely fallen off a cliff. Okay, because the numbers were really good coming out of the US. Also, the numbers, or I should say, the data coming out of China was really bad. So that's had a twofold impact on Aussie dollar. So when the information is collected on Tuesday, what's that, the 13th? So when the information is collected on Tuesday, what I would expect is we're going to see a big increase in contracts in the size of the market. From the non-commercials, I would expect to see a big change in short contracts. And from the commercials, this will be interesting, because if the commercials think that we're close to a bottom, we'll probably start seeing an increase in long contracts significantly. If they believe there's further to go, yes, they will be increasing their contracts or their net position to the upside, because they do exactly the opposite of what the market does. Because effectively, the Aussie dollar will be becoming better value. Okay, so that means that they can make better acquisitions, because the Aussie dollar is cheaper for them to buy from a different currency. So they can make better acquisitions, cheaper insurance, cheaper labor costs. Okay, so that's how the commercials work. So we're not really going to see too much from the commitment of traders this week, I would expect, because last week was the first week of the markets getting back to normality, and I think the following week and the week after that is where we're going to start seeing the COT report bringing out some interesting statistics for us to look at. The other market, because we're already short sugar, if we look at this, I want us to bring in sugar. Well, we can see we've got a nice support level here that broke through, came back to sit on it again, and boom, it's come straight back up and it's consolidating. And it has been struggling at this level now for a period of time. Okay, but let's look. The commercials are aggressively short this market, and the last time they were aggressively short this market, we had a fall from $20 right down to below 15, which, or I should say 20 down to 15, which is a significant move. Okay, that's a 25% fall in market value. Okay, so anything of any sort of similar move right now, I'd be very happy for, and it would give us a very, very good return on our accounts. Okay, so let's have a look at what's actually happening in terms of the positions with sugar. So I'm going to click on compare. I want to see who's doing what. So let's have a look at the commercials. We're going to add those to the chart. Right, I'm just going to get rid of, because we're short, okay, what I want to see is an increase in short contracts from the commercials. Okay, the red line is a short contract. Look what's happened. If we follow what's been happening, the commercials have been adding a lot more short contracts as prices rallied. Okay, so let's just zoom in a little bit more. So we can see that as prices rallied in sugar, look what the commercials have been doing, this red line. They've been adding to their short positions. So this is a good sign. This is a good sign. This is why we're short. Okay, let's just have a look what they've been doing with their long positions. Okay, long positions, there has been an increase, okay, but it's not been as significant. Okay, if we look at what happened with their net, okay, we can see that their net positions have gone to the short side massively. Okay, they're currently over 200,000 contracts short, okay, as a net position. So if we look from this point here, where they were just about in the positive territory, i.e. they had more long contracts than short contracts, where sugar hit a bottom, and look since then, basically what's happened is all the commercials have done is increase their short contracts by a significant amount, and they've added to their longs a little bit, but we can see what's happened to their net position. Okay, and I just want to zoom out just so you can see where their net position is in relation to, this is going back to 2014, June 2014 here. You can see now their net position at that point was 242,000 contracts, and here we were at 256, currently sitting at 231, so a very, very big extreme here. So I would expect to see a similar reaction to what we saw here. Okay, it is taking its time, and I know guys that are in this trade, which is most of you, you are getting a little bit impatient, but don't worry about it. Our stops are protected above the highs. We've had to sit through a little bit of nonsense. If we get a break and a close below this short-term trend line here, then I can't see why we won't achieve this as a first target, which is probably going to bring you in, I don't know, best part of 3 or 4%, and then we can look for extended targets somewhere down here. We're going to manage our stop accordingly. Okay, now let's just bring sugar back up, bring our other markets back up. So what we've got, natural gas on a 6-month, looking for shorts. Just going to bring this in. Now, where we look at this, what I always want to do is I always want to look for technicals. Okay, so when we look here, are we approaching a level of resistance? Well, potentially we are approaching resistance through here and here and here. Okay, so I'm going to compare now with and see what's happening with our, oops, I'll scroll past it, with the positions. So I want to have a look and see what's going on. So the commercials, if if I'm going to be a seller, I want to see the commercials are increasing their short contracts. You know, a bit like we saw in sugar. Okay? First thing I see is the short contracts are decreasing. So we know that if we're at an extreme here, I know that their long contracts are going to be decreasing as well. So to me, this is a market I'm going to avoid. Okay? I'm avoiding because the market is shrinking in size. Okay? The commercials are leaving the market. They're reducing their long contracts. They're reducing their short contracts. I don't want to be going short without seeing that the commercials are going short, and they're going short aggressively. Okay? Let's have a look at what else? No. Right, I'm going to avoid Japanese yen. Okay? I know we're at an extreme, but we're at an extreme because of what's happening with China. Okay? So let's just go Japanese yen, call positions, commercials, add chart. Okay. Now, the reason we can see what's going on here. Look at the last time our net position was somewhere down here was all the way back here in the 90s. Okay, so it's a long time ago. Now, the worrying fact for me obviously is that the Japanese yen is a safe haven. Okay, so before I'd be looking at selling Japanese yen, I need to see a couple of things. Okay, one, yes, we can see that the markets here are increasing their short contracts, and they're decreasing short contracts, which is nice. Okay, that's the kind of thing that you do want to see. Okay, so that is what we do want to see. But with this market, I probably want to see a turn, or maybe I'll be looking at a key level such as 116 to see what happens. I'm just going to bring that in. Bear with me 1 second. Just going to scroll back across our charts and bring in dollar yen. Here we are. Okay, so we can see that I think there's room left, bit of free fall in dollar yen to come back down here, and I would expect that we're going to see continued selling of yen by the commercials. Okay, the non-commercials will keep buying it. Okay, why? Because they're the trend followers. They're the trend followers. So let's just bring it back up now and see what the non-commercials are doing. We have a look at the non-commercials. See, they're doing exactly the opposite. They're buying lots of yen and they're reducing their short contracts. Red line is reducing, green line is increasing. So we've got the tug of war now. It's the battle between buyers and sellers. One key fact here is non-commercials are trend followers, right? So let me just show you their net position right now. If you look, the non-commercials are trend followers, right? When we have flips from positive to negative, so I mean a bias on where the non-commercials stand because they're trend followers. When they flip from below zero to above zero, you generally get periods of trend, which we do here. Then they go from above zero to below zero. So that means that their bias is to the short side. So if we look at the non-commercials from this date here is, sorry, I can't see because I need to go back up here. So the date, that's the 22nd of October 2012. The non-commercials have been short the entire time. Look at the blue line. Until just now. They've gone back to positive. So this to me is a sign that we're going to see buying of yen, continued buying of yen, until, if we look at the futures price, at least 9,000, and potentially in the next one will be up here. So how does that equate to a chart? Well, if we're thinking about a chart, I think 9,000 will equate to somewhere around the 116s, and if we are going to get the next move and we get a close below that, then we're probably going to come back down to 105. Whether the governor of Japan will allow that, I don't know. But that is how the markets are looking to me. Okay. Let's go back to our charts here. Okay. Going to come to 6 months, see what we've got highlighted. So no, I'm not interested in those. Aussie dollar, we're already in, and that makes sense. Sugar, we're already in. Okay, so the 6 month, we're done on the 6 month. We can see that the British pound, the commercials are extreme long on a 6 month look back. The level we're at, we might see a reaction. We can see seasonality is down for January. Question is, I wouldn't trade against the trend with commercials on a 6 month look back. If it was a 36 month look back, then I'd be looking at the level we're talking about, looking for technicals to potentially be going long. But it's not a 36 month, it's a 6 month look back. Crude oil, okay? Looking for longs according to this. Not yet in my eyes, okay? Let's just pull up the data. Crude oil. Compare charts. Okay, now you look at these lines and you can't really see a lot because there's so many contracts. What I'm going to do is I'm going to just get rid of these. Now, if we look at crude oil and look what happens and where do you think we might see some market movement? Well, if we look here at the commercials long contracts have been sat around the 600,000 mark now since, what date is that? February 15. So nearly a year. The commercials that haven't really done a great deal with their buying. Okay, they've kept their buying at a similar pace. Okay, so in order for me to be looking to get long this market, I'm probably going to want to see the commercials increase their buying. Okay, so what I want to see is maybe long contracts above this number here, 629,000. Until we get long contracts above there, I won't be looking to go long this market. Okay, so I'll be waiting for that number, then we'll be applying technicals and looking to jump on the back of that. Let's have a look what their short contracts are doing. So their short contracts, well look, their short contracts are being reduced, which is why the commercials are at an extreme positioning to go long. It's only because they're reducing their short contracts and not increasing their long contracts. So let's just think about what is going to happen there. We want to be buying when the commercials buy. We don't want to be buying just because they're reducing their sell positions. Does that make sense? Okay. Let's have a look what the non-commercials are doing in this market. Now this information, guys, is priceless. Okay? This is exactly what the big guys are doing. The people that move the markets, the trend followers, the hedgers, this is what they are all doing. Okay, so you've got to, it's the closest thing to insider trading. Okay, so I'm just going to get rid of this, get rid of this. Right, the non-commercials, look at them. They've been increasing their short contracts, and rightly so. Yeah, the market is trending down. Let them increase their short contracts. What about their longs? What have they been doing with their longs? Look, they've been reducing their longs. So they're reducing their longs and increasing their shorts. That means their net position is going to be moving more aggressively. There. Net position, falling. Okay, they're trend followers. They're increasing their shorts, decreasing their longs. Perfect scenario. Continue to look for short opportunities. Crude oil. Yeah, I think $30 is probably on the cards. From that point, we'll have to see what happens. Let's have a look. What's the next market I want to focus on? Commercials, corn, soybean meal. We'll sit on the sidelines for those at the minute. Okay, let's go out to 36-month commercial index. Let's see if there's anything. So Japanese yen, and so there's nothing really worth selling that we're not already in. And then 36-month Kansas wheat. Okay, gold. Okay, we're gonna have a look at gold and palladium. So let's have a look what's going on in gold. Let me just bring in the COP positions. Alright. The key area that I've been watching was 11,000 or 1100, I should say. Why was I focusing on this particular area? Well, we can see a nice bit of support and resistance here. So support, look at these closing prices, all on the same closing price. Tip of the wick, tip of the wick. Now we've got a close above. Okay, this goes hand in hand with what I was saying earlier about risk on, risk off. Right. What's actually happening with the commercials long positions? Not a great deal. Staying static. You'd agree? What about their short positions? Well, their short positions decreased massively, and they're pretty static. Okay, so there's not a lot to be said there. And here, so look, what we can see is last few weeks, the commercials, non-commercials, all they've done is reduce their position size over the Christmas period. Okay, so I think next week, when the data is collected on Tuesday and released to us on the Friday, is where we're going to get a better picture of what is happening within the markets. So you can see that this week's buying and selling hasn't yet filtered through into the commitment of traders. Okay, so we're still on sort of Christmas data right now. So there isn't a great deal with what we can do and what we can pick up from what I've seen here. The last little tab that I want to show you is the COT extremes. Okay, now you don't need to worry about the bias, whether it's commercials bias, non-commercials or non-reportables. In this section here, what we're going to look for is these little tabs here that are highlighted, ATH and ATLs. So what they stand for is all-time high and all-time low. Okay, so we can see that in Kansas wheat and Minneapolis wheat, the commercials have got an all-time high in the number of contracts long. In Chicago wheat, we've got an all-time high in their net position. Okay, if we come down here, soybeans, we can see that the net position on the non-commercials is at an all-time low. The short contracts with soybean meal is at an all-time high. And that's it. Okay, there's not a great deal actually of information here that we can run through. Okay, so with commitment of traders, that's all I'll be looking at this week. I'll be back with you in a minute where we're actually just going to have a look at the Dow and the S&P to see what other trades we can potentially look at for next week. Alright guys, so that's me done with the COT report today. Any questions on that, and I'll look to get back to you via Skype or email come Monday or Tuesday. Just give me a couple of minutes and I'll bring up the charts for the Dow and the S&P. Okay. Okay, so we're looking at our final two charts of our weekend analysis of Dissect and Detect, and they're going to be the S&P 500 and the Dow Jones, because I reckon we're going to get some really good opportunities at these two markets. So this is the weekly chart, US 500 or the S&P 500. We can see we've got a very clear, precise, few touches here of a trend line, which is a good distance away from where we are right now. Now, what I've also highlighted on the weekly chart is this, what was demand zone, and we're now going to use it as a supply zone. So if I'm going to drop down to the daily time frame and go back to where we are, we can see here, supply zone, supply zone, supply zone. Break and close above becomes demand. So support now was resistance here, becomes support, becomes support, becomes support, becomes support, becomes support, now becomes resistance. So in essence, very, very simple, guys. All we're going to look for is a pullback if we're lucky enough into around the 1995 to 2000, and we're going to look to trade it down here. The question is, we might not get the opportunity, i.e. it might not come back here, because when a market crashes, it goes a lot faster down than it does up. So be aware, there's two things we're going to look at. The retracement back into the 19994 level, let me just check, 1990 up to about 2010. Our S&P sell zone off a daily level, weekly level. If not, we're just going to trade the hourly or the 15-minute. Same as what I said before on all the other charts. Look, here we are. Just pull in. It's not rocket science. Support, support, support. Failed rally, breaks through. Look to get short in here. Take it down. If we're intraday trading, make sure you're getting money off the table early. You want to be banking, okay? Always be banking. So S&P quite clearly showing us what to do and where our, let's say, extended targets could be. Our extended targets are going to be down here. When we get here, there's definitely going to be a reaction. Definitely going to be a reaction. If we break through here, hold on and get short, because we're going to get a good ride down, that's for sure. I mean, where's it going to go to? Who knows, but next major structure, somewhere down here. Let's pull in the monthlies. So I'd say if we break through here, this is our next stop, about 1550, 1565. Okay, that'll be a key sort of area to be watching. Okay, last but not least, let's have a look at the Dow Jones, and you'll see we've got a similar thing here. Okay, you can see this nice horizontal through basically, what is it, the 16,000 barrier, which we're fast approaching. But then this is the next sort of extreme area. If we look at the tips of the wicks, okay, so this is where we'll see our first reaction. Next one here, if that goes, let's come out to the monthlies. Well, next major high was here, but I think we'll probably see a free fall. Okay, so this is what we need to be looking. If this goes, look, there's your failed monthly double top. High comes down, potential lower high. Here's our neckline. If that goes, it's coming down. There's no two way about it. It's coming down, and we want to make sure we take profit off the table. All we want to be banking profits and leaving some to run. Leave some to run. Let's drop to the hour time frame. Look, we've got a couple of moving averages on here, just from previous coaching sessions. Look, if you need to use moving averages to see where these pullbacks are, fine. If you just want to trade off price action charts, clean charts, do that as well. Just be consistent. Write yourself a set of rules. I will be sending out, I will create a back testing or data collection Excel spreadsheet for you to all start using, and this is where you're going to formulate your own set of rules based around what you see. Okay, there's no right and no wrong way to trade, but what you must do is do the same methodology each time. Okay, so whether you're going to be trading with moving averages, whether you're trading support and resistance, whether you're trading just pure price action, yeah, master it, become efficient at it. If you're going to trade multiple time frames and look at cyclicity, do that as well. Make sure you're consistent. Okay, this is what we do at Phoenix Blue. We make you consistent. Okay, and it's about putting the process in that suits you, suits your mindset, and suits your lifestyle. Okay, don't try and be someone else, because someone else is not you. All right, guys. So look, we've got quite a few markets to watch. In terms of the commitment of traders, it's going to be another 2 weeks now before we get out the next Dissect and Detect video. So in that meantime, you're going to have a couple of videos. We're going to have Trading Tuesdays, which are going to be, we'll have one on Tuesday, obviously, going to give us an insight on how the market's opened Sunday night and what's happened through Tuesday. We've got our watch list coming out again next Friday, and then will be another Trading Tuesday, followed by Dissect and Detect the next week. Guys, I hope you found the video useful. Enjoy your weekend. I'm going to go and enjoy my Saturday now in London. If I see any of you, be sure to have a beer and a chat. Guys, have a great weekend and look forward to seeing you on Tuesday. All the best. Bye-bye.